Good, everybody, still here for the Daily Market Pulse. It is Monday, August 18, 2014. So we have stocks going higher once again. Slight pause on Friday and then an absolute move and higher move here. In lower volume, mind you, but still nonetheless, it is higher, grinding higher. Um, there's the Dow Jones. So there was the push into the moving averages, into a polarity. Slight pause on Friday between the 20 and the 8 moving average. Boom, right into the 50. So at this point, room still to go higher into the channel, still all the way to 17,000, almost 200. So everything looks very bullish, even though it's overbought. It still looks bullish on the upside at this point. S&P, same thing. It actually starts to go through that area as well into 1970. Across the 1960, 1965 area. In fact, regains the 50, regains the 20-day moving average here as well. Looks very strong, looks very good. Overbought, yes, but room into the pivot and the window. Let's put a line there, right there. That's what we're looking at right now. Well, 1990 is approximately where it was. The last time, that's where we're looking again for the S&P. The NASDAQ is next. The NASDAQ is pushing, had a rising window today, very strong move. It's got room to 45.50 just about. Makes new highs. So talk about, there was some new lows, there was a set of lows established relative to the lows established back in June, and then now a new high established. Very strong, very good, very good. TSX regains the 20-day moving average for the first time in 3 weeks, practically. Is up there, now looking for 15.5 and the upper Bollinger Band as well as a target on the upside. We look at the DAX. DAX was waffling back and forth between 9,300 and 9,000. There was a possibility it might come back down toward 9,000 as a retest, but it immediately bounced back up toward 9,250. So now we're looking back to 9,400 as the target on the upside, with the moving average at 9,200 as our current support level. US dollar Canadian dollar has come into the 200 and the 20-day moving average for support as of Friday, and including, I believe this is today. It should be, yeah, that's today's candle as well. So that's holding support for now. Percentage retracement most likely that coincides as well. May come down a little bit lower still and retest 108.50, but for the most part, it's pausing there for the time being, deciding which direction it's going to take. The Euro US has paused and gone sideways across 133.50 and looking like it may want to pop. If that's the case, then the U.S. Canadian dollar may actually drop. Treasuries, interesting again, we're always going up as the markets were going up. Hit a high of over 141 on Friday, and then but today at least it's paused, gone red as the markets have gone green. It's one of the few times they have actually gone in the opposite directions lately. Support will be across 130. You can see essentially there was that red line right across here, right in here, 138 to 139-ish is going to be a support area. Across these highs and across the 8 moving average approximately will be the support we'd be expecting for treasuries. Then we have to reevaluate what's going to happen there. Japanese yen was looking like it was finding support reasonably well at 97.50. But getting squeezed still to the downside by the moving averages above the 20, the 200, the 50, and then of course support right below at 97.50, so it remains stuck in that range. Gold has pulled back a little bit further down to 1,300. No big deal, right where the moving averages are, around number 1,300. Could still come down to 1,280, 1,285 to retest support, but we're still looking for a move to the upside, 1,340 or higher. And silver is lower than what gold is right here. It's actually had made new lows, but look at the Harami today. The red candle on Friday, whereas it was green for gold, and here a green candle for silver, finally waking up. Looking at support at 1950 with room to 20 and then 2050 on the upside. After a decent bounce and reversal but still finishing red Friday, this went red even further today, not getting past 95 and dropping and closing at 93.75. Probably worth warranting to see what the September contract is. A continuous contract I've got you here, so you'll see it'll actually, the green candle will be next to the red. There it is. So a slight difference between the two. That was a bullish engulfing, but right at a polarity of 97.50 with a slight pullback toward 96. We're still looking for a push through 98 essentially to go higher to 99 and century mark. I think that's still possible for crude, so we'll be, of course, waiting to see what happens there. And then we have small caps pushing into the 50-day moving average with a little bit of room still to 116, and then eventually 117, ultimately 120 to 121. Stuck right now currently between the 20 and the 50-day moving average, but above a window, a falling window that was established at 114.50. With the markets up, the VIX likely dropped. Remember, the VIX got pretty violent, or at least fairly volatile, on Friday with the bullish engulfing. It has simply come back toward 12 as a retest. Nothing conclusive here just yet, although it's holding. We'll see if there's a bounce and the market starts to show signs of selling. But right now, resistance across 14 and support across 12 for the VIX.